So 1040 candle on ES. Would
Okay, give
you
me a second.
utilize?
Give me a
Okay,
second.
yeah,
Let me
yeah.
look back up. ES time frame.
Time frame. I'm gonna say 5 minute because the person who's talking to me really only uses a 5 minute, and he's saying would you utilize that as a mitigation, as a bullish mitigation block, the high? And he's one of your students. He's a charter, and he actually loves trading the mitigation. So I find that
10,
fascinating.
1040 on a 5 minute
Yes,
up today.
yes, sir. 1040 on a 5 minute on ES. One of your charters is asking, potentially, would you utilize that as a bullish mitigation block?
I personally would not, but I would use the range of the wick, the discount wick of 1010 of today on
Okay.
ES March
Okay.
delivery contract. If you grade that that wick, whenever wicks are more or less a consolidation, my eye is going to go to that more than anything else because it's already graduated gap theory where you can slice it up. And if it's going to be bullish, it's going to use the upper portions of it. So at the 50% of it, or consequent encroachment of it, to the highest portion. So having that, let me see if I can put this on here in my own chart. Bear with me. I'm sorry.
No, it's all good. It's a technical question referring to the chart. So
Yeah, if you look at the 0.625 level on that 5 minute discount wick, you'll actually get the very, very low tick on 1105, and then it starts to send it up. So to answer your question, no, I wouldn't use it as a mitigation block.
okay, okay. But you did grade that wick, or did you grade the 45? Was that what we were
The
referencing?
if you the wick, I would not use that candlestick that they're asking
Okay.
for.
Okay. Yes. Okay.
But
That's the first point. You would not use the 1040
the thing
as the
that jumped off
mitigation
the
block.
chart to me
Okay. Yes.
was the discount wick of candlestick 1010 for ES March contract on a
Ooh.
5 minute candle. And if you
Yes.
grade that, you'll see that at the 0.625 level, it comes in at 69,552 and a quarter, if my eyes are not failing me.
Yeah. Yeah. Yeah.
And then the 1105 low comes in at, uh, why am I not able to see that?
Right around 69.53, 69.53.50 on the 1105 swing low.
Hang on,
Six,
my eyes are failing me.
yeah, 69.53.50, I think.
The low comes in at 69,553 and a quarter, and the level comes in at 53 or 55 and a quarter. I can't make it out of my text. You can check my math on that on your end,
Yeah.
but
Yeah. Yeah.
that's I would have used that because it's in the upper half of the wick that's on the 1010 candlestick. And let me make sure I say this correct because I already know I'm going to have 1,000 questions because of this whole business right now. The market came down, made a low, and reacted and started to move higher. Inside that swing low, there's a wick there. Now imagine if that wick wasn't there at all on the 1010 candlestick on the 5 minute chart of ES March contract. If
Mm-hmm.
that wick wasn't there and say that SIBI would have formed on the 1015 candlestick, that would have been a inversion fair value gap, and that would be the PDA rate to anchor off of. But because that wick is there, it's sharing generally the 90% of the range that 10, 15, 5 minute
Yeah.
candlestick. So forget that candlestick, go right back to the wick and then grade that. If it's bullish, it's going to use consequent encroachment of that wick or another gradient level higher than that. And you can see that that's exactly what you're seeing here on the 1105 candlestick. It uses that 0.625 gradient level on the candlestick at 1010. And then that supports
Yeah.
that. So
Wow. Totally see that. Totally see that on the 1010. And it's funny how you say that, because if the wick were any smaller, then that would have been an FEG that we would have found interest in, as you're pointing out. That would have then been an inversion. But because the wick was larger and it actually touched that other wick within the 3 candle sequence, you're foregoing the utility of the body of the candle 2 and utilizing the range from wick 1. So that's
Why?
fascinating.
Why?
Why?
Yeah, think about why.
Um,
Why am I doing it?
from a 3 candle standpoint, your
Don't
equilib.
think that.
Okay.
Don't think that. What did
Okay.
I
Okay.
take your attention cut through to that 10-10 candlestick? For what
Yes.
purpose? What is the 10-10 candle illustrating?
It's sweeping the overnight liquidity. It's taking the first piece of the overnight liquidity. It's taking
No,
the
the
NWOG, the
actual
first.
no, the
Okay. Go.
candlestick in itself, the 10
Yeah.
10 5 minute candlestick.
Hmm.
Why did I pull that candlestick? What was the defining characteristic about that candlestick that I referred to? It's wick, right?
Yes.
So what did I teach you wick is?
Gap inefficiency.
Right. So cancel the candlestick to the right of it. That body doesn't exist.
Hmm.
What the algorithm is going to go back to is that wick because that's the gap.
Yes. Yeah. Yes.
You see
Yes.
it?
Yes. Yes.
I'm
Just
sorry, I have
imagine.
to
Just
interrupt. That's
imagine
so
that.
much sauce. It's
Yeah, that is quite a bit of
That's
sauce. You
crazy.
look, it's kind of when you look, it's kind of crazy.
Yeah, you
It
got another
is.
PD, right? So there you go.
It is. No, it is. It really, really is. It's a great way for folks to anchor off of. And I mean, it's right where we have that close right at the daily open, or there's the daily previous daily low, where we're really in that NWOG as well. So we're looking at confluences, and we just swept an overnight low. It continues within its follow through to take the monthly open and continue into further NWOGs before it flips, but you maintain that wick and that range as it prices to and through it. And then you would be becoming interested in this 1050 macro, the down closed candles that would be retracing back into that wick for a very good opportunity towards a trade. That's how I would see the way you were explaining that. I personally, I like the down closed candles into the graded wicks. So, but even coming up out of it, it's the wow, wow.
If there's a wick, okay, the wick will take precedence over imbalances. It will take precedence over order blocks. The wick is a gap. It's a gap. So if we have an instance like we have here where there's two candles side by side and the wick's to the left of it, disregard it. Act as if that candlestick to the right of it doesn't even populate on your chart. Just ignore it. And then visualize the range that the highest high and the lowest low of the wick is the fair value gap, which would act as what? Inversion. And how is an inversion fair value gap utilized when we're bullish? It trades above it and comes back down and respects the upper half and does not lay a body down in the lower half. Look at the gradient levels on that wick. It's doing the same thing because it's a gap.
That's just so mind blowing. If someone could put a screenshot and mention somewhere where we're at here, where are we? We're in the macro, ironically, 11:49 going into 11:50 here. It's just the timestamp there, Michael. I want to just include that we are going into a macro here, 11:50. So we love that. Wow. Deep breath. I see folks coming wanting to. Let me get FX for living back up here. Oops, that was the. Sorry, that was meant to be the other one. FX for living is back. Welcome back, David.